So again, good morning and welcome to today's webinar. I'm so happy to have everybody here. I hope you are all here in good spirits. Feel free to put in the chat where you're coming from today. It's always nice to see where everyone is joining us from. I'm Jamie Seward, Associate Director of Affinity Engagement Programs with the Office of Alumni Relations here at Johns Hopkins. And before we proceed, I'd like to acknowledge our co-sponsors, the Finance Affinity and the Blockchain and FinTech Network. Before I turn the program over to our speakers and moderator, I encourage you to ask questions in the Zoom Q&A located at the bottom of your screen. Now, I have the pleasure of introducing our moderator, Alexis Johnson, the president of the Johns Hopkins Blockchain and FinTech Network. Alexis began investing in cryptocurrencies in early 2017, and in the spring of 2018, launched Lightnode Media, an events PR and media company targeting the blockchain community. And hopefully she'll tell us a little bit about her upcoming event. It looks amazing, and I encourage all of you to attend. In the summer of 2019, she founded Legends Investment Network, the largest private investment network for professional athletes and entertainers in North America. She holds a bachelor's in civil engineering from Johns Hopkins Whiting School of Engineering, and we are very happy and fortunate to have her moderating this panel today. So with that, I will turn the program over to you, Alexis.
Awesome. Well, it seems I actually don't need to introduce myself. So thank you. Thank you, Jamie, for the intro. Thanks everybody for tuning in today for the session. Really excited. We have a very not only diverse audience, but a diverse set of panelists here. And so definitely wanted to start off with doing some intros. And if we could go around the virtual room, that would be great, starting with Professor Liu.
Hello, everyone. Such an honor to be here and participating on this really exciting topic today. My name is Jim Liu. I'm an associate professor in finance at the Johns Hopkins Carey Business School. I've been teaching here almost like 10 years, and in the last 5 years, it's been super duper exciting because, I teach the cryptos and blockchains course. Students in the business school are very excited about this technology. I just want to sort of say right off the bat, it's more than just cryptocurrencies. We can use blockchains to solve a lot of sort of social problems and so forth. So I think it's amazing. One of the guest speakers who came over talked about just how much growth and opportunities and jobs are available. So I just want to reiterate for those alums who are thinking about maybe making a pivot into another career. I come from the hedge fund industry, and a lot of my friends have migrated over to the crypto industry. So there's a lot of opportunities. I think it's only just going to get more exciting, now that the U.S. seems to be not banning any cryptos. Thank you.
Awesome. Thanks so much for the intro. Brian, if you could give us a brief background.
Sure. Good morning, everybody. Happy to be here. Brian Gelfand in Montreal, SICE 88, Bologna 87. Really happy to be here with the Johns Hopkins group. My background is in law and financial market infrastructure. So I began my career as a lawyer. I wrote a book about financial markets, and that sort of pushed me over into the derivatives exchange world, where I designed, operated, and regulated derivatives markets. I then moved into the post-trade world in terms of securities and derivatives settlement. And in those roles, I was very active in developing and working on proofs of concept using tokenized securities and central bank digital currencies to play out some potential innovations and efficiencies in those markets. So these days, I am consulting with investors and with market intermediaries in order to move us towards this very promising digital future.
Awesome. Howard?
Thank you very much, Alexis. My name is Howard Adler. I am a class of 1972 Arts and Sciences graduate of Johns Hopkins. I'm also a lawyer. For 30 years, I was a partner at Gibson, Dunn and Crutcher, a law firm where I ran the corporate transactional practice of the firm, co-headed it for a while. Before that, I was executive vice president and general counsel of Riggs National Bank. Prior to that, I ran the corporate side of the legal department at Mellon Bank. And from 2019 to 2021, I was Deputy Assistant Secretary of the Treasury for the Financial Stability Oversight Council. It was there that I really got to acquainted with cryptocurrencies, and I was part of the government's response in trying to understand and deal with issues raised by cryptocurrency. Since leaving the government, I've written several op-ed pieces about cryptocurrency, and I am now working on a book called The COVID Crisis and the New Market Bubble, which ought to be published by Paul Dry Books in 2022, and we'll have a lengthy chapter on cryptocurrency. Thank you.
Awesome. If
I
we
see
go to
there's-
Galia. Yeah.
Oh, there you go. I saw you were muted, and I think I'm the last panelist up. So hi, everyone. Galia Benarzi. I'm calling in from Tel Aviv. So we're 7 hours ahead of you on EST. I'm the founder of Bancor Protocol. Bancor is one of the early kind of DeFi protocols that launched in the 2017 wave. Bancor is the first AMM, an automated market maker that essentially took the traditional order book and put it on blockchain. It allows for kind of any currency to any currency swapping, all in a decentralized, permissionless, algorithmic, and then hopefully, as we see it, fair, balanced, and low-cost way for end users. Before crypto, I was at, I grew up in Silicon Valley. I've been in kind of high-tech software, mostly startups, my whole career. And I did the SICE and Bologna program at Johns Hopkins in 2009 through 2010, which was a really interesting time to be studying financial markets and global monetary policy during kind of the housing crisis for the US and during the beginning of the Euro crisis, or the Greek Euro crisis for Europe. So that actually really kind of put me on a path to look at monetary policy differently. And when I got back to Silicon Valley in 2010, discovered Bitcoin, had the aha moment that really technology could be a broad part of the solution to some of the problems that we face in that part of society. Been in crypto really ever since. So investing, trading, studying since 2011, built a bunch of community currency type of applications and pilots before backing into the need for Bancor, which is still what we focus on today.
Awesome. Awesome. Thanks for the introductions, everybody. I guess let's get started. Let's dive in. We have very diverse background in terms of the panelists and the audience, and maybe we have some beginners. We may have some novices, and then some experts when it comes to crypto in the audience. But I figured we start by going over some kind of broader topics and definitions. What is blockchain? What is crypto? And what's the difference between the two? It would be great for our panelists to kind of chime in and, from their perspective, kind of define the two terms, starting with Jim.
Hi, everyone. Yeah, so, I tried to explain this in class a couple of different times, but, basically blockchains is the technology platform, and cryptocurrency, the first use case was Bitcoins. And so Bitcoins is this wonderful technology that solves basically the double spend problem, whereby you can send some digital value and now you know you don't have it. I like to tell this story about the cloud, and there's a book in the cloud, and that's the ledger. And you know, you pick somebody in the network to write on that book, but once you write on that book, you can't delete it, right? So everybody can take a look at that book and they can see who owns what. That was kind of the first iteration of Bitcoins. But then Vitalik took it to the next level, which added smart contracts, which opened up a huge door for all these wonderful other things to do that. With Ethereum and Vitalik, unlike entrepreneurs who are strong-minded and they have their own sort of vision, we had a few other entrepreneurs launching out of the original Ethereum group of founders, and that's Cardano and Polkadot and probably a few others. And what the idea is they're trying to solve is the problem about scaling this platform. So each one has their own solutions. And it's important to understand that we're sort of still pretty early in this game, and there is a lot of risk, a lot of volatility. But I want to just tell you guys some of the really exciting things. In 2007, we had a whole sort of activity of ICOs. Some were not very successful, a lot of them weren't very good. But I think Bancor was very successful, and what they did was just amazing in terms of contributing to the automatic market making. And I'm glad Galia is here, because I'm really curious, because everything is open source, so people can see your code, they can see your business plan, and on top of that, Bancor was first, but then you had Uniswap and SushiSwap, and you have all these vampire attacks, and it's just so efficient in terms of how the internet connects us all, and we can see other people's business plans. But just to come back to what's going on from Alexis's question. So think of blockchains as a platform, and then think of different use cases. And we talked a little bit about sort of financial use cases, but it could be other things. It doesn't have to be cryptocurrencies and automatic market making and borrowing and lending. It could be other things, such as self-sovereign identity. Can you put your healthcare records on a blockchain? And that could be another use case. The other one that I heard is sort of ESG. People are using it to help facilitate food for refugees and so forth, in order to identify who gets these foods. But I'll stop there. I hope that helps people understand the difference between blockchains and cryptocurrencies.
Yeah, Brian, we'd love to hear your perspective on the definitions.
Well, I guess the simplest distinction I would make is that blockchain and distributed ledger are technologies. They're ways of setting up and operating databases. And the crypto currencies, or the tokens, are records that live on those databases. So blockchain itself as a technology has multiple uses. And as Jim was saying, identity management. Jim, you mentioned ESG in terms of how to track things. There are projects out there that are being used to establish and track the fact that certain assets and users are actually adhering to ESG principles, right? Because of the unique database aspects of blockchain and DLT. Whereas crypto is a very broad term. It's used differently in different ways by different people. I actually prefer the expression digital assets, because that encompasses things like native cryptocurrencies. Those are the very familiar instruments like Bitcoin and Ether, which exist on the base layer of blockchain protocols. You have stable coins, which are other digital assets, which are representations of currencies and assets that are off-chain, so to speak. Tokenized assets like fractions of real estate holdings, securities, those exist on blockchain and DLT. Central bank digital currency is another one. So the distinction I make is that blockchain and distributed ledger are technologies and architectures, and the crypto assets are assets that live on those technologies and that are secured through cryptography, which is where the crypto comes from. Not crypto as in crypto creatures like werewolves and dragons, but crypto as in cryptography, which is the technology and the methodology used to secure those instruments.
Awesome. Thanks for that thorough definition. Gayla, Howard, do you want to chime in?
Yeah, sure. I'd love to chime in. Just looking at blockchain very, very simply, it's a way of recording transactions in the cloud. Once a transaction gets executed, it gets blasted out into the cloud. It gets validated, and if it meets whatever validation standard the various operators or decentralized operators of the technology mandate, then it becomes recorded in many, many places, and there's a permanent record of it. It's a new technology. It's useful, as the other panelists have mentioned, across the board for many, many uses. And cryptocurrency is one of those uses. It's a way of placing monetary transactions involving money, buying and selling of things, trading of money, into a blockchain and recording those transactions. That's my understanding of it. Try to make it very, very simple.
Maybe I can just add, for sake of simplification, like a metaphor that that I find useful, which is that you can think of blockchains like the rails, the railroad tracks, if you will, and you can think of tokens as the cars that are running on them, or kind of the application that's running on top of the platform. So you might have different kinds of blockchains. So one blockchain, the rails might be very flat, very stable, but maybe the cars can't move on it that fast. And a different railway network, you might have, some gradient, you might have steep ones, or, steep up or steep down that allow the cars to move faster, but maybe have an increased risk of crashing or falling off the rails, if you will. And so the design of the rails is essentially what we call the consensus mechanism, or the consensus protocol of a blockchain. And then the design of the car, or the token that's running on the blockchain is what we call a token protocol, or depending, or a token application, or a DApp, a decentralized application, depending what you're looking at. And you might hear this term cross-chain, like a token has the ability to be cross-chain, or an application has the ability to be cross-chain, in which case someone has built, either the token developer themselves or the underlying railway providers have built bridges in between these separate tracks to kind of allow a car to move from one track to another. That's actually an area in the space today that's finally kind of coming to fruition. It's been talked about since the beginning. You can imagine, if you take the railway metaphor, that it's very hard to build bridges between completely separate tracks and allow one car that works well on one track, to work well on the other track after crossing the bridge, etc. But it is now finally happening, and so you'll hear that more and more, that a certain token or a certain app is cross-chain or multi-chain or interchain. These are all different ways of saying that a token has the ability to run on one or a few different blockchains.
Awesome. And just to kind of echo the panelists, really, the blockchain is this immutable distributed ledger that, stores data and transactions over a network, and the use case expands even beyond cryptocurrency and digital assets. So my next question for everybody, really goes back to, how far we've come. And so Bitcoin, since its inception, and just the industry at large has experienced immense growth, immense progress. However, the industry continues to face a variety of challenges, like the technological shortcomings, the environmental implications and impact, market volatility, fraud, hacks, etc. In your guys' opinion, what are some of the biggest challenges that crypto faces today, and some of the steps and solutions to overcome those challenges, starting with Jim?
All right. So, I think one of the challenges that I see is people. So we have this wonderful technology to really change the world. But, with all this great power and potential, we have to sort of lay down some, clear rules. Now, Howard, I'm going to sort of engage you as used to be a regulator. I think it's important to understand how difficult it is to regulate this new technology, because you really don't have any history, right? And so, we're bumping against, the Howey test. Is it a security? Is it a commodity? Is it a property? What are these things, right? And what happens whenever maybe you launch a token and you use it to start a business? So clearly it was used as a security, but then eventually it morphs into providing gas for your platform to gas transaction. Now it morphs into something else. How do we regulate that over time? As a finance professor, when we created a bond or a stock, it just stayed as a bond or a stock through the life of the security. But hereby, we have some new technology to create these instruments that can potentially morph. And so I think it's very difficult, and we have to understand that it's very difficult. And I'm having trouble trying to teach this in the business school. I can only imagine how difficult it is for regulators in the SEC and the Treasury Department and so forth. Even in Congress, they're supposed to sort of lay down some guidelines here. And the other thing that I think that's important is, and this is just sort of looking forward to the education component. I think the onus is on professors and educators, and to go out there and actually start engaging the community. And I haven't been honestly doing a good job at that. I just concentrate inside Johns Hopkins, the business school, the classroom, and I should be more engaging down in DC. And I'm trying to do that. There's some organizations like the Government Blockchain Association and the Digital Chamber of Commerce. I'm trying to get a little bit more involved there and build bridges there and talk to people, because at the end of the day, I think what the potential is there, but we need to get everybody on board, or at least get them excited about the potential. And what kind of potential are we talking about here? I think on the order of what the internet did, right? In the first sort of, in the 90s, when we first saw email, we couldn't anticipate Google and Facebook and Amazon. So, we're sort of there with the blockchain and cryptocurrencies. I don't know what businesses are going to be created, but I definitely know they're going to be some of the biggest businesses in the world. And so, I think what's at stake is let's think about it. It's technology. Let's try to work together on this. Let's lay down some guardrails so that we can sort of all benefit in terms of providing economic activity. And, can we reinvent cities like Baltimore? Absolutely, right? We're seeing some of that happening in Miami. And so, with that, I'll stop there.
Awesome. Brian?
There, found the unmute button. I think, Jim covered a lot of ground there. I think if I was going to focus down, at least from my perspective, and I work mainly in the institutional space. So with market infrastructure, like exchanges, clearinghouses, and the participants in payment systems and the participants in those systems. So there, I think you see regulatory uncertainty is a key challenge. People are very keen to get involved in the space, but often regulatory uncertainty in terms of what they can do, what they can't do, what the nature of these instruments are, how they will be regulated, that's an impediment. Another thing is there are areas where you can use the technology and deploy tokens to achieve tremendous efficiencies in existing systems. But to do that, you have to challenge existing market conventions. And I would say one thing that is almost tougher than changing a regulatory approach is getting market participants to change the way that they interact with each other. and move from one convention to another. You have huge, when the US security settlement system and the Canadian system went to T+3 settlement to T+2 settlement, we weren't talking about a huge technological change. We were talking about changing market conventions, which is very difficult. And we do see the moves being made, and we see dramatic increases in adoption by institutional market participants. And if I could just mention a couple of numbers here, Fidelity did a survey of 1,100 institutional market participants this year. Out of those 1,100, 50% are invested in digital assets. More than 70% had a neutral to positive perception of those assets. And nearly 80% felt that digital assets have a place in a diversified portfolio. So it's happening. It will, like any other change, it will have speed bumps. It will have, as Galia said, some of those rails will have lots of ups and downs and lots of friction, but we're moving there.
Yeah, and so for Galia, as an entrepreneur in this industry, I guess, what are some of the biggest kind of challenges and shortcomings that an entrepreneur may face in this space?
So like any entrepreneurial field, it's tough. It's tough to run up a hill first and take some of those arrows. There's also a tremendous amount of, as was mentioned earlier, opportunity and creativity in the space. So I highly recommend it to anyone who's considering it. But there are, like everyone said, many, many challenges. I would say the most day-to-day practical challenge that we face is regulatory uncertainty. Depending on how you want to approach that, you can either spend, a ton of time and a ton of money and a ton of kind of legal precautionary work, trying to avoid problems that you might think you might have in the future. Or you can not do that and then kind of, deal with the problems as they come up. Both strategies have pros and cons, but they're both very energy consuming for an entrepreneur that has all the regular problems to deal with. The challenge with the uncertainty, if you want to take kind of a more conservative or like a safe route in terms of the legal viability of your entity, is that you have to act very big while still being very small. So, we from a very early phase had lawyers in America and lawyers in Israel and lawyers in Switzerland. And we had a hack early on in the system, and we were suddenly dealing with Interpol and, stuff that kind of in your regular entrepreneurship. I had done tech startups for 15 years or so before Bancor, and, never faced any of those challenges. So that is by far kind of the daily challenge. On a more minute level, there's not enough talent yet in the ecosystem. So you have a great idea, you want to build it. Now you're going to fight for engineers. You're going to struggle to find them. You're going to struggle to keep them. You're going to struggle to pay them. And so that kind of lack of talent is something, as Professor Liu mentioned, that needs to be dealt with more on the education pipeline side of things, maybe less the business school, more the engineering programs, but sort of getting talent, well-trained talent into the ecosystem is a challenge for all. And then of course the volatility in the marketplace, which creates a lot of hype, a lot of negative hype, a lot of kind of really catchy, but really inaccurate headlines. Can just be challenging for anyone trying to build a business, dealing with a lot of that blowback sometimes, including the really, up cycles and the elation in the market and the frothy prices, all, for an entrepreneur and for a manager trying to keep, people at desks and code being pushed is all can be very distracting. Yeah, I hope that's a nice survey of a part of how we spend our days.
Awesome. Thanks for the answer there. I personally, like you, have witnessed a lot of volatility, a lot of bear markets, and many would say, 2021 is a bull market. It's open to opinion there, but would you guys say that COVID-19 has been a major kind of catalyst and the perfect storm for crypto to take off in a big way? What are your thoughts on that?
Alexis, can I just jump in and just go back a minute and address the regulation issue, since that's my background. You have Jim, Brian, and Galia all mentioning that as a major challenge to crypto. And I just wanted to give some perspective on the regulatory historical perspective and a look at the future where regulation might go in the United States. At the beginning of 2019, the entire crypto market was about market value about $200 billion, not a macroeconomically significant number. The folks in the United States government who worried about regulating crypto were sort of the criminal folks who were worried that crypto was a vehicle for international criminals, ransomware, anti-money laundering folks. People at Treasury and at Justice and in the US security agencies were very concerned about crypto. In June of 2019, the world changed dramatically when Facebook announced Libra, the first major stable coin that they wanted to put into effect. And alarm bells rang throughout the United States government as people were facing the over 2 billion and now we're 3 billion users of Facebook who might all of a sudden be investing in a private currency that was going to be governed by an association in Switzerland outside the presumably outside the regulatory reach of the United States. That not only worried the criminal people, but it worried Treasury and it worried the Federal Reserve as a central bank, because it was perceived as a threat to the primacy of the United States dollar, which since Bretton Woods in 1944 has been the world's reserve currency, primary reserve currency. And what that means is that right now, 59% of the foreign reserves of all non-US central banks are held in dollar-denominated assets, mostly treasuries. And that means that there's a constant demand for US Treasury. So when the US government borrows to fund its debt, to fund its programs, there's a demand for those securities and interest rates are low. That gives an advantage to the United States economy, which is funded by the primacy of the US dollar. My friend Brian yesterday called that dollar hegemony. It's also been referred to as an exorbitant privilege, but it's a concern of the Treasury Department. Maintaining that primacy is a concern of the Treasury Department in any administration, and it's a concern of the Federal Reserve as America's central bank. So that is something they are very heavily focused on when it comes to looking at stable coins. Now, the United States regulatory system is very separated and does not cover, nothing covers the totality of crypto. The SEC has jurisdiction in crypto disclosure, but only if a crypto is viewed as an investment contract. There's a 75-year-old Supreme Court test called the Howey test, looking at what that is. The Commodities Future Trading Commission has said that crypto is a commodity and regulates certain aspects of it, but there's no agency that really can get its arms around the totality of crypto. There's a lot of concern about crypto, not only in the administrative agencies of the government, and the president's working group is about to come out, probably maybe this week or later this month, with guidelines, questions about how to regulate stable coins. And that's going to be an important document to look at. But so right now, regulating crypto in its totality will depend upon congressional action. As you know, it's very hard to get this Congress to do anything or to agree on anything, but there's pretty much bipartisan support that some regulation is going to be necessary. And what I've seen discussed and heard about is the idea that issuers of crypto may have to have some sort of a banking charter to do that. That's going to be really tough for DeFi, where there's really no centralized person to get a charter. But I think that this is very, very important. Everybody's got to keep their eyes on it. This is a great technology, power to regulate, and also be the power to destroy. This issue, by the way, is being also dealt with by Canada. Brian's an expert on that, and by Europe. But I think that that the next year or two are really going to be defining. I think that being a crypto lobbyist in Washington may be a growth industry for the next couple of years, but there's going to be a lot of activity, and the outcome is somewhat uncertain. And I've now spoken too long, but I think I've tried to cover that. Thank you.
Thank you for addressing the regulatory concern perspective very thoroughly. So I appreciate you chiming in there. Prior to you chiming in, I was really asking the panelists, how has kind of COVID impacted the growth of crypto? Is it the perfect storm for crypto to take off? Just wanted to hear everybody's perspective on that.
Sure, I'll jump in. What? No, go ahead. Was someone going to say something?
Yeah, sorry, Jim. I was just starting to say that. I mean, Galia made reference to being at SAIS during a financial crisis. I graduated from SAIS in '88, and I'm one of those people who remembers the '87 market crash and financial crisis. And anytime you have those dramatic market events, you have a bunch of things happening in their wake. You have people questioning market structures. You have innovation. You have people looking to address the problems that were raised or the problems that caused those events. So anytime you have anything dramatic happening in the world, there is both a need to and an opportunity to respond. So yeah, I think that, and again, from an institutional perspective and looking at payment systems around the world, you have a dramatic decline, an acceleration of the decline in the use of cash. That has had a real impact, a tangible impact on the growth in this activity. And the development of tools that are purely digital, purely electronic. You also have people who have had some time and some opportunity to spend time doing this, to spend time learning about and trading some of these instruments, for better or for worse, depending on where you sit. But clearly, I think from those two perspectives, COVID has had an impact, and that impact will last years. And I think it will contribute to the transformation of markets.
Yeah, and just to follow on and maybe provide some response to Alexis's questions about COVID. Every time I put on my finance cap, my traditional way of thinking, when I look at cryptos, I'm kind of really wrong. So what do I mean by that? After the ICO sort of craze and people were creating their own tokens, I said, hey, this sounds pretty interesting. This seems like the way to go. And there was ERC 721, which is a non-fungible token. And I'm like, nah, that's never going to take off. And then, of course, in 2019 in COVID, a lot of artists couldn't sort of create their artwork and go to galleries and show it off. And basically, what happened was we had this wonderful, exciting activity where artists were creating their own, artwork, and they're sort of minting a non-fungible token. And the significance of the purchases were sort of astronomical. People were like, whoa, this is really interesting. You could actually create a business. And indeed, there were a few business websites such as OpenSea and Raribles that launched. And we're seeing even more of that happening with a publicly traded company, Coinbase, just recently said, hey, do you want to sign up for our NFT platform, non-fungible token? Now, I didn't expect that at all. And I was talking to one of my friends. His son just graduated college, and his dad was telling me that his son already made like $20,000 after 2 weeks of work making these bears. I don't know what kind of bears, and selling them and creating some kind of community. And I was like shocked. And his son is sort of convinced that he can make $1 million in a year. And his dad and I were like, wow. These younger people really know how to use this technology, and they're pushing forward in a way that I never thought would be, possible. How can somebody who just graduated college make $1 million in a year, right? And so, cryptos is really challenging for me because it's challenging all the things that I thought about finance and financial instruments. I'll give you one other anecdotal story. When I was looking at all the cryptos and I was doing my deep dive and reading the white papers, I looked at Dogecoin and I said, okay, it started as a joke. The founders liquidated everything. That will never take off. And then you have someone like Elon Musk promoting that, and another generation of millennials, they really love that. And they want to use that as possibly a medium of exchange. Now, will that become a currency? I don't know. But, from going forward from now, I'm pretty sort of careful about some of the predictions. And because I know that, I'm even a little bit, sort of out of touch of which direction this could go. And, with that said, I think, with COVID, a lot of people had a lot of chances to stay at home and use the internet and sort of understand, how this market's going to develop. I just want to point out one thing that I think is kind of interesting is that, historically, goods and services were sort of sent, physical person to person, but with the internet, we can stretch across, the whole world, right? And one of the speakers I invited talked about sort of this tribal token, right? I'm Korean American, right? I work at Johns Hopkins and I live kind of near Baltimore. If Baltimore issued a coin or token, yeah, I'd probably buy some of that. And maybe I would tip some of the squeegee workers, around Baltimore City. But then would I buy something like a Johns Hopkins token if Hopkins ever issued one? Yeah, probably, because I'm in the ecosystem and maybe I could tip some of my friends and some doctors or so on. But then, what if there's like a Korean American token, right? And so now I can interact with, my parents are, Korean. I was born in America, but I'm Korean American. That could be kind of interesting just to get some insights what's going on over there. Now, what are the tax implications of all of these transactions, right? So, I can kind of understand why the internet is stretching us all over the world. Our communities are sort of vast, but yet, we have regulations that specifically are for the sort of US, right? And how are we going to deal with these sort of across the world, ability to do these digital transactions? I don't have the answer, but I think that's one of the challenges that we're going to face.
Maybe just to round out kind of the discussion on COVID, or just contribute another thing to it. If we zoom out for a sec, COVID has its very specifics. It's a health crisis. It's right now in modern times, vaccines, a lot of particular issues to the particular crisis. But if we zoom out and like Brian said, kind of to any crisis or to many crises, each one offers sort of a wrinkle in the cultural fabric, right? Of different size, of different flavor, if you will. And I think a sort of general wrinkle that's happening now, and it might even be a combination of the financial crisis sort of leading into COVID. I mean, this is basically a decade, right? Or a bit more, a couple decades throughout is, what do we believe? It's like an ethical crisis. What do we believe is right? What do we believe is fair? What do we believe is free and freedom? And we talk a lot about regulation on this panel and in general in the industry, and with very good reason. But I think our challenge is not how to regulate crypto. Our challenge is how to regulate, period. How to regulate tech, how to regulate robotics, how to regulate AI, how to regulate tobacco. Our challenge is kind of governance, broadly speaking, and in the good sense of the word challenge, that we're progressing very far down a spectrum of decentralized governance or democracy, if you will, whatever flavor you're a part of or you believe in. And so the kind of the challenge we face is how to decide and how to decide what to do at any given juncture. And I think what COVID really brought to light is a lot of pent up angst, if you will, around transparency, around equity, right? And this is happening kind of in tandem with a lot of racial issues in the United States, a lot of religious or international conflict issues abroad. I mean, there's no lack of crises, wherever you look. And I think that cryptocurrency and decentralization in general, because it's so challenging to regulate, is sort of the ultimate moment for us to discuss how we want to regulate, period, right? You're talking about a currency that anyone can make a derivative of, or a version of. You know, currency used to be like stamped by the king on a gold coin and like beheading if you use something else. And, you know, all the way to today, how we look at the SEC with global jurisdiction and the different frameworks that we're a part of. So I think the opportunity is so much greater than crypto and blockchain. It's kind of an opportunity for anyone, anywhere, to be part of reevaluating what are our ethics and truly what do we believe in.
Let me just jump in and follow up. I think Galia really raised some great points. Remember, the crypto was basically started by the Nakamoto Manifesto that launched Bitcoin, and that is a profoundly libertarian document. Nakamoto began Bitcoin because, whoever Nakamoto was, or if he really exists, began Bitcoin basically because he didn't trust governments and centralized systems, ultimate libertarian. Recently, you've had the very statist reaction of the Chinese government. The Chinese government has shut down Bitcoin mining, Bitcoin transactions, and they've launched their own central bank digital currency, the digital yuan, which is widely seen as a way of controlling people within China, more by an authoritarian state, and also as by challenging the as a way of challenging the United States dollar internationally as a means of foreign exchange. So that's a very statist reaction to this whole thing, very negative. And the key that I think governments are going to face is how to balance the need for safety. And there's a need for safety. If you take a look at stable coins like Tether, right now you've got no visibility into the assets that back Tether. It's supposed to be fully backed by assets. Unlike Bitcoin, there's supposed to be value there. But you can't figure out whether the assets are highly rated treasury securities or the lowest rated forms of commercial paper. There needs to be some regulation and some, just to protect consumers, and some visibility into things like that. But the key is going to be how to do this in a way that doesn't kill the golden goose, this wonderful technology that is changing the world. And that's going to be really, really difficult. It's going to take a scalpel and not a cudgel, and that's going to be tough for government. But hopefully the United States can get there.
Awesome. Thanks. Brian, you have any, well, you spoke earlier. I think we got basically everybody's perspective on COVID impacting the crypto markets, because we are kind of running out of time a little bit. I think we can open it up to Q&A from the audience. So if anybody has questions, feel free to add to the Q&A. And so there's a question from the audience. Michael, cryptocurrencies have major implications for nation states. Are nation states going to be passé? I don't know if
I'm happy to just say a word about that to keep us moving, which is that it doesn't seem to me that issuing currency is the only thing that nation states do. Nation states do a lot more, from borders, protecting borders, order in society, social services. Currency is, to the point of the question, a huge part of the mandate, has always been, and not one that I think states are going to be excited to give up anytime soon. But were it to become inevitable, in hindsight, that they would give up some of these powers, I don't think it's synonymous with giving up their kind of raison d'etre itself. I think there's plenty for government and governance to do, including kind of governing this open currency system, if not, directly issuing it themselves.
I agree 100%, Galia, and I think putting a SICE hat on in terms of talking about policy and monetary policy, I think that's where you see challenges. So we're not challenging the fundamental raison d'etre for a nation state, but some of the tools that nation states use to implement policy can be challenged. And you do see a lot of the discussions around central bank digital currency, which we call CBDC. A lot of the design choices that are available to central banks are looking at how they can preserve some of their monetary policy levers, whereas some of the manifesto of Bitcoin maximalists is to deprive nation states of those monetary policy levers. So yeah, that's a real concern, and you can see that concern expressed in the attempts of the central banks to develop policies and their own central bank digital currencies.
I think we're at the point where the U.S. is, not banning cryptocurrencies. China clearly has, came out very strong. And then we have some of these countries like El Salvador that was mentioned in the chat that is embracing this. And I think what we're going to see is how this plays out. Now, if El Salvador is very successful, then there'll be many other countries that will embrace Bitcoin as a national currency. So that's going to, is it going to be the situation where the emerging markets jump in terms of the developed markets and lead, the world? We're not sure, right? And I don't think anyone has a good answer to this yet, but we'll literally see this play out, in the next couple of years or, possibly sooner. The only thing I want to sort of mention is I think blockchain ultimately provides a lot of freedom for the users in the networks, and it sources talent from the edges of the network. So if you're a nation state that wants to empower everybody inside your country, let's say, then this is just right on par. But if you want to centralize power, right, this is going to be very challenging to allow blockchain development within your nation state.
I'm sorry. Let me just say a little bit about El Salvador. I think Bitcoin was a poor choice. As a currency, there are a lot of weaknesses that Bitcoin has. Number one, it's really very, very volatile. You want a currency that can lose or gain 20% of its value in a day or two. That doesn't strike me as a great idea. It takes a long time for the blockchain, the Bitcoin blockchain, to validate a transaction. A credit card transaction takes seconds. A Bitcoin transaction takes more than an hour. It has an enormous, and the amount of energy that miners use is environmentally hazardous. There are other stable coins that might have been a better choice for El Salvador, but 90% of the countries in the world right now are evaluating some sort of a central bank digital currency, and those things are clearly coming. Many of them have them, particularly, and it's maybe a very valid thing, particularly in countries that don't have a really good banking system, where there are lots of people who are unbanked. A central bank digital currency may be a great way of reaching those people. Bahamas, for example, has a sand dollar. There are lots of examples in sub-Saharan Africa of folks thinking about a digital currency. If the Fed comes up with a digital dollar, that might be something that's widely adopted around the world as well. So, just stay tuned. It's a very interesting area.
Yeah, I would direct, if participants are interested in those emerging markets and smaller country projects, there's Sand Dollar in the Bahamas, there's Dcash in the Eastern Caribbean Monetary Union, and the most interesting one, I think, in terms of a live project is Bakong in Cambodia, which really has gone a long ways to addressing that financial inclusion challenge for the underbanked.
Got it. And we have a couple of questions that have been entered in the Q&A, and I just wanted to address the panelists on this next question. Would love for you guys to comment on Jamie Dimon's continued criticism of Bitcoin and crypto. What are your thoughts on his criticism?
So actually, the reason why I got into cryptos was a student, an MBA student, who came over to me and told me about cryptos. And I just reiterated what Jamie Dimon said at that particular time was not very, pleasant words to this poor student. But luckily, this Hopkins student was persistent enough, and he was like, hey, Professor, you should really look at this. There's something really, really interesting. And I did, and he was right, and it was very fascinating and interesting when I proposed the first Bitcoins, crypto, and blockchains course in the business school. I kind of got yelled at along the same lines of what Jamie Dimon sort of, said to, this person. And, I was just very gentle, and I said, look, why don't we give it a shot and see what's happening? Other universities seem to be embracing this stuff. And there's a lot of activities which could provide potentially opportunities for our students to get jobs after they graduate. And they let me teach the class. This was in 2018 fall semester, right? But I couldn't call it Bitcoins, crypto, and blockchains. They would only let me call it blockchain. So we taught the first blockchain class. Only recently have we put cryptos and blockchains together. And I think at some point, you could argue that, Bitcoins and cryptos has become mainstream, right? But just to highlight on, some of the things that Howard mentioned, indeed, Bitcoins is very volatile. And even though the original paper was talking about sort of, peer-to-peer e-cash, I think ultimately Bitcoins, at least at this stage right now, seems to have sort of morphed into e-gold, where people are just buying it and holding it, right? And I do think that, that doesn't preclude some technology or entrepreneur figuring out a way to make it, better, or, doing something with the Bitcoin technology. One thing that we have to sort of also understand is that nothing on the internet is 100% secure. I mean, there could be reasons why things fall apart. So there is risks in there, right? The other thing is what happens whenever we have these quantum computers that's around the corner. Are we going to break these, cryptographic encrypted sort of wallets? Are we going to adjust? Well, the industry will probably adjust and fork it and, continue to develop. The other thing is, I think we're kind of beyond the point where people don't understand, or they think that only bad actors are there. I agree that there are some bad actors in the crypto markets, but just like any other financial markets, I worked on Wall Street. There were some bad actors there. They weren't the majority of folks there. And I think it's going to play out the same way. When I interact with sort of people in the crypto space, I think the majority of them are entrepreneurs trying to figure out a business model and trying to, make a real business out of it, right? And help people in that sense. So, and we have the tools and technologies to start hunting down people and looking at, illicit transactions and so forth. So I think that that's a good thing, and more transparency is always great for markets to develop. And there was another question. I'll just comment this real quickly. We took some data from Bitcoin's monthly returns, and we did a mean variance efficient frontier. And the actual optimal allocation to a traditional 60-40 portfolio was about 1.6%. So it wasn't significant, but that's when we did this study about a year or two ago. But now, as I'm sitting here looking forward for the opportunity, I think that really underestimated the potential. So I've updated my my institutional recommendation to be around 10 to 20% in the crypto markets, in the blockchain markets, because I see that much opportunity there. Now, will it replace existing financial companies? I think there's a chance, right? Some of them will be replaced, similar to sort of like Amazon and Sears and so forth, right? For those companies who are paying attention and they can adjust quickly, then they won't get, disrupted or replaced. But those companies who are not paying attention to this technology development, I definitely think there's a high probability that they will get sort of disrupted significantly.
Just to follow up on what Jim said, I think Jamie Dimon is conditionally right on Bitcoin and generally wrong about cryptocurrency. Why is he conditionally right on Bitcoin? Bitcoin's backed by nothing. The value of Bitcoin is based totally on people's perception. But just like gold, gold has a value. Gold isn't particularly useful for anything except as jewelry if people like it. It's a perception thing. Bitcoin is very much the same. It's not backed by anything. It's going to be by its nature volatile because people's perceptions may change very, very quickly. But there is value in other cryptocurrency and in stable coins. They are backed by real assets. And the whole thing is it's a new technology that is the genie is out of the bottle on crypto. You're not going to put it back in the bottle, and there is a great deal of value in crypto generally.
I think
Yeah,
worth
and-
just
Go ahead.
saying a word on on Howard's point about value, is that it's important to remember that value is what we believe it to be. So we often, think that the markets or the prices or the dollars prescribe some kind of axiom or some kind of, God-given value to things. But value is completely subjective and is completely dynamic. And so, water might cost X in this environment, but if we experience a global drought, water is going to cost way more than Bitcoin. You won't be able to do anything with Bitcoin. You'll only be able to drink water to survive, and so on. It's an extreme example, but the point is that value is dynamic and subjective, and some of the notions that we've relied on to help us quantify or compare or measure value are in themselves changing. And I think that kind of speaks to something that's come up across the panel in terms of maybe the younger generation or just people with different approaches to this industry, where you might say, well, what's a Dogecoin worth, or what's a Bitcoin worth, or what's a Pepe the Frog or a Lazy Lion or a Bored Ape worth? And as we learn at SAIS and at Johns Hopkins, I think broadly, like, things are worth what people will pay for them, so to speak.
Yeah, and I just want to chime in at the end there. I mean, yes, Jamie Dimon has come out in the press and said XYZ. However, internally, they do have a blockchain unit, Quorum, and that unit is working with consensus. So they are invested in this space, even though Jamie Dimon may say XYZ in the news. So I think we are out of time. So I want to thank all the panelists for contributions and attendees for adding questions in the Q&A. And then Jamie, you can wrap up.
Yes, thank you. This was amazing. You all did a wonderful job, and we genuinely appreciate your time and talent. Thank you, Alexis, for being a fantastic moderator. And thanks to all of our guests for joining us today. A follow-up email will be shared following this webinar that will include a recording of the program along with a list of resources and our event schedule. And we hope that you join us at another program. If you have any ideas for programs, please send them my way. Thank you again, and everyone enjoy your day. Galia, please enjoy your evening, because I know you're far ahead of us. And thank you for joining us all the way from Tel Aviv. We appreciate it. So thank you, everyone. Thank you for your time.
Thank you.
Take care.
Thanks.